Welcome to MoneyTV, the program that uncovers the truth about money and its inner workings. I'm your guest host, Jon Stoddard, standing in for Don this week. Get ready as we dive into some of the crucial topics that have been impacting investors and shaking up the financial OTC markets. Reg A's, liquidity woes, and the surrounding the inability to clear and sell your OT shares, and the shady practice of naked short selling and predatory toxic debt. Let's start with Reg A's. Regulation A, also known as Reg A, grants certain companies the ability to offer and sell securities to the general public. This provision provides an exemption from full registration requirements by the SEC for smaller public offerings, making it easier to raise capital for businesses. But there's a catch. Reg A isn't all sunshine and rainbows. Raising money is not going to solve market demand. Reg A carries its own set of risks and complexities that investors need to be cautious of. Now, on to liquidity, or should I say the lack thereof. When it comes to over-the-counter shares, investors find themselves grappling with the challenge of finding buyers and experiencing difficulties in clearing and selling their positions. It took me a month to sell my NVOS shares. OTC trading involves stocks that aren't listed on formal exchanges, which means transparency and liquidity can be sorely lacking. This can severely impact investors' ability to maximize gains or minimize losses, leaving them trapped and unable to liquidate their holdings. Wait, there's more. Brace yourself for the controversial world of naked short selling. This practice involves unscrupulous investors selling their shares they don't own and haven't borrowed. The aim? Driving down stock prices and wreaking havoc on companies and unsuspecting investors. These naked short sellers don't even bother to cover their positions by purchasing shares they sold, hoping the target companies just go belly up. Their insidious actions can push even fundamentally sound companies toward bankruptcy, as artificially depressed share prices hamper capital raising efforts. While short selling can be a legitimate strategy when conducted within market rules, this nature of naked short selling poses grave risk to market integrity. Lastly, we've got to confront the concerning issue of toxic debt. Preparing for a chilling deja vu 2008 financial crisis. Toxic debt refers to financial instruments like mortgage-backed securities that have turned into ticking time bomb due to poor performance. These toxic assets wreaked havoc on the economy before, causing widespread damage. Today, we find ourselves once again staring down the barrel of toxic debt in the OTC markets, with concerns mounting over the quality and stability of various financial products. To sum it up, in this intricate financial landscape, it is imperative for investors to be informed and comprehend the intricacies surrounding Reg A's, the liquidity challenges tied to clearing and selling OTC shares, the dangers of naked short selling, and the ever-present risk associated with toxic debt. Only through education and unwavering vigilance can we strive for a transparent, equitable financial system. So stay tuned for more in-depth discussions with experts on MoneyTV, where we deliver the insights you need to make well-informed decisions about your money.